Bloomberg Audio Studios.
Podcasts, radio, news.
Hello and welcome to another episode of the Odd Lots podcast. I'm Tracy Alloway.
And I'm Joe Weisenthal.
Joe, does it feel like we're at a turning point of some sort? I feel like that's always a dangerous question to ask on a podcast because the tendency is to call turning points or say we're at, the beginning of some new structural shift.
Yeah.
Because that's kind of what everyone wants to hear, right?
You know what I've been thinking about that's like super meta and maybe beyond the scope of anything that we talk about on a podcast, but it's just since we're talking about big moments. When I was a kid, probably my parents thought that the future would look very different when I'm an adult, Mm-hmm. But now I think that for my kids, the future will look so radically different that I just can't imagine 20 or 30 years from now anything being remotely similar to it is today due to various things that we're seeing with tech and geopolitics and things like that, particularly AI.
I don't know. Back to the Future promised we'd have flying cars by now, and I'm still waiting.
They did get video conferencing.
No, I guess
totally
that's true.
Right. So that's one thing. But yes, you're right.
All right. Well, there's obviously plenty that we could talk about when it comes to the future, like what is realistic and what is sort of pie in the sky thinking, like flying cars. I suspect we are not going to have those for a while because of various reasons. But one person we do like to speak to when it comes to thinking big picture and kind of talking about these potential paradigm shifts is Steve Eisman, of course. He's been on the show a couple of times. He's the managing director at Neuberger Berman. And Steve, thank you so much for coming back on Odd Lots.
Oh, thanks for having me again.
So big picture thoughts. What are you thinking at the moment? The last time we had you on, you were talking about a paradigm shift as interest rates got higher. And it seems like investors are starting to ratchet down their expectations for cuts right now. So we might actually get that higher interest rate environment for longer.
Let's just start with the Fed so we get that out of the way as quickly as possible. I have felt for a long time the Fed is extremely insensitive to its own impact on markets. Was it last week when Powell spoke?
Mm-hmm. So we're recording this April 2nd, but he spoke on Good Friday.
When he said that he thought that because rates are higher, financial conditions are tight, that was a little weird. I mean,
right, because if you look at
credit spreads are extremely narrow. I've always felt that, like I said, the Fed's insensitive to its own impact on the markets. It's clear the Fed wants to cut rates. Seems to want to cut rates very, very badly. Why it wants to cut rates so badly, I don't understand, in that they've engineered something that's really pretty fantastic. Not only is there no soft landing, there doesn't seem to be any landing. And as far as, the data that I can see, there seems to be something of a reacceleration in the economy right now. So why would you cut rates? What's your rush? The actual, what I would say, even though I think the Fed is going to cut rates, the fear that I think should be out there is that if they do cut rates, there'd be even more of a resurgence in the economy and there'd be a resurgence in inflation. So why would you rush to take that risk? I don't get it.
It's funny you started off talking about financial conditions. Actually, I wrote about them a little bit this morning. And the question that I have in my mind, measures of financial conditions are clearly loose, right? So the stock market is basically at all-time highs, input into financial conditions. As you mentioned, credit spreads are pretty tight. And then, of course, crypto, which maybe you have thoughts about going to the moon. So all kinds of measures of in liquid market loosening. On the other hand, the IPO window still hasn't totally reopened. It's not obvious that private investment is reaccelerating in some dramatic way. Hiring intentions, the labor market continues to at least normalize. It's not falling apart by any stretch, but it's nowhere near where it was, a couple of years ago. Are those tight credit spreads and high stock prices translating into the economic variables, employment and inflation, that the Fed really cares about?
Inflation, I can't say. I think it's too early to say what's happening there. I mean, the only thing I could say is that from the companies that I speak to on the industrial side, things seem to have reaccelerated this year. Orders have picked up. Supply chain problems aren't as much of an issue. Nobody's really talking about firing anybody. Is it perfect? Yeah, what's perfect?
Sure.
But things are pretty good.
Yeah, my framework for understanding this is that the Fed basically can look through loose financial conditions on the assumption that if it does build out investment and a lot of the inflationary pressures that we've seen have come about from supply constraints, then it maybe is reducing inflation longer term rather than leading to additional inflationary pressures. But one thing I have to imagine they might not be huge fans of is crypto. Crypto's back, right? I think Bitcoin's down as we're recording this, but it surged to a new all-time high. I don't think anyone was really expecting crypto to come back in this way when rates are, still at the highest level in decades.
Well, that's because it has nothing to do with rates.
Okay.
So let's backtrack for a second.
Sure.
Here's my big Uber picture. You look in bad times, people focus on balance sheets and credit quality. And in good times, they focus on stories. And there are three, I think, great stories of our time right now. And those are AI and everything having to do with it, infrastructure, and crypto. And I believe in the first two, and I don't believe in the third. The thing about crypto, and here's me getting on my soapbox, so everybody can take this with a grain of salt. I have no position in crypto, and I never have. But, there are two issues with respect to crypto. Number one, is it a currency? And number two, if it's a currency, why should you own it? So let's bypass issue number one, because that's kind of philosophical, and say, okay, it's a currency, why should you own it? And the people who are advocates of crypto all say exactly the same thing, which is that there's a problem with fiat currencies, which is government currencies. There's been too much of it. There's too much bond issuance. There's too much debt, blah, blah, blah. And so if you want to hedge against fiat currency, buy crypto. In other words, crypto is like digital gold. If that's the case, and the theory is correct, then how should crypto act? Crypto should do well when on days like today, where people are starting to worry about inflation again, and interest rates are up, and the market is down, and NASDAQ is down. And crypto should do poorly when interest rates are lower, nobody cares about inflation, and NVIDIA is up 25%. And how does crypto actually act? It acts exactly opposite to its own thesis, which is the correlation between crypto and NASDAQ is very, very, very high. So what does that say to me? That crypto is just another way that people like to speculate on because they like to speculate. That's all. That's all it is. That's its only use. That and money laundering.
Which is a use. Okay, so the three big stories of our time that people are into: AI, infrastructure, and crypto. Two of which you believe in. We know you don't believe in one of them. Let's go to infrastructure for a second, because you mentioned that you talked to a lot of industrial companies that would be theoretically, I assume, primed to take advantage of a lot of the building out that's going on. So what are they saying to you specifically right now? I mean, you mentioned that they're not talking about job cuts, but where are we in the broader infrastructure cycle? Because we saw all of this money, we saw these various bills.
I think we're at the beginning.
Okay.
So here's my soapbox again. I think that there are several sort of themes that weave its way into infrastructure. So one is onshoring. The world spent 40 years creating a global supply chain that was incredibly efficient and inexpensive and deflationary. And turned out, what we all learned during COVID, also very brittle. So you're a CEO, you get a free pass the first time. If you had supply chain problems, nobody's going to blame you that you had supply chain problems because of a pandemic that nobody predicted. You get one bite of that apple. If for some reason you have a supply chain problem again, that's on you. You get fired for that. So companies are bringing parts of their supply chain back to the United States. That's a 10-year story, and we're like in year 2. That's theme 1. Theme 2 is data centers, which is an AI offshoot, but it also has industrial implications because, number one, the GPUs that NVIDIA and AMD are selling utilize 3 times more electricity than a CPU, and they're also incredibly hotter. So they require a lot more of the whole cooling systems that you have to put into those data centers. And brings us to theme 3, which is improvement in the grid. Now, the grid needed improvement before because of all the pressure that we're putting on it from electrification, et cetera. But now that you add the GPUs on top of it, the pressure on the grid is even higher. So all the industrial companies that deal with utilities that are spending a ton of money to improve their grids, that's also a very long-term theme and also pretty much in its early stages. And the last part is greenification, which has been a long-standing theme, but is going to keep going. And you take all four of those boxes and you turbocharge them by the fact that the United States has not had an industrial policy in anyone's lifetime, and it has one now. The combination of the IRA and the IIJA adds up to about $1.2 trillion over 10 years. So that'll turbocharge all the four themes that I just spoke about. That's why infrastructure is so interesting.
So I remember one of the last times we spoke to you, you mentioned a specific company, Quanta Services,
yes,
which does electrification of the grid, something like that?
It's an engineering construction company. And one of the things that it does, if a utility wants to build a new plant, et cetera, Quanta builds it for them.
And that one is up, I think, around 40% since we spoke to you, which has
nice
been
call.
like less than a year or so. So are those the kind of companies that you're trying to find?
Yes, there are those. Then there are some, materials companies that are going to be building the roads, the bridges, et cetera. And, everything basically that surrounds that world.
Would you do pure commodity plays? I mean, copper was a big one.
I don't do commodities. There's certain things I don't do. I don't do commodities. I don't do oil. I don't trade currency. I don't trade commodities. I don't do any of that stuff. I just buy stocks.
Say more about some of these, because everyone knows NVIDIA, but you do see this in the sell-side research that's coming out, which is that everyone is looking for these secondary and tertiary plays on AI. And so Quanta Services, congratulations on the good pick there. But what are the other types of companies that you're looking at as part of this in areas like cooling, which is obviously going to be huge, or, electrical component? We got ISM Manufacturing out yesterday. Transformers continue to be in shortage for basically 3 straight years. What is your process and how are you going about identifying these secondary and tertiary, maybe AI data center plays out there?
Well, I mean, there are, it's all the offshoots of the 4 boxes that I mentioned. There's the cooling part, there's the grid construction part, there are the utilities that are more on the green side than on the not green side. I mean, there's just a lot to do. I mean, the other thing that people are that we're trying to figure out is, okay, there's NVIDIA, there's AMD, there's Oracle, there's Microsoft. One of our newer stocks is Oracle. Anyone who has a huge database of anything consumer businesses, in the world of AI is probably sitting on a gold mine. The question is whether they can monetize it. And then the next level, which I don't have an answer to, is, okay, everybody's trying to invent apps. Whose apps are going to do well? Although my guess is that one of the bigger beneficiaries is probably going to be Apple. Because at the end of the day, the consumer, I can't possibly predict what apps are going to do well. But let's assume there are a bunch of them.
Mm-hmm.
And let's assume that a bunch of them are for the consumer. I have no idea what those are, but let's assume that they exist. They are created. People are going to use them on their phone. So AI is going to have to be on the phone, what I'm hearing is that Apple is talking to every AI creator in the world to say, come on our platform because we'll make your app more efficient. They'll probably roll something out in June when they have their, I don't know if it's an investor day or tech day, but Apple potentially eventually is going to be one of the bigger beneficiaries in the second wave.
Speaking of waves, this is one of the reasons we wanted to talk to you. How do you separate the hype around AI versus the reality, the real opportunity there? Because we are seeing this dynamic in the market now where companies are just mentioning AI in their press release, right? Everyone's doing AI, everyone's looking into AI. And again, one of the reasons we like talking to you is because you are well known for the due diligence that you do on various things, most famously on the housing market before 2008. So how are you separating the sort of fact from fiction here?
Well, I mean, the facts are that AI at this point is really only benefiting a very small number of companies, most of whom are very, very, very large. So that's what we have focused our attention on. Everything else at this point seems to me to be hype or potential. And we don't own those companies. We own the ones where what's obvious. After that, we'll see.
Tracy asked about the due diligence process, and I sort of want to keep driving at this because you mentioned one company, but there are a bunch of companies out there that probably sell some component that is useful for utilities. There's probably various companies out there that sell cables that connect those NVIDIA chips from one to another. And there's probably various companies that sell cooling solutions, et cetera. And so in that due diligence process, how do you start that? What is your sort of open up the window of what does it look like, the process of identifying them?
Well, in terms of, let's talk on the infrastructure side.
Yeah, that's the part I'm interested in.
I have narrowed down that world to where I think it's significant to about 80 companies.
Okay.
And of those 80, I would say about 30 are very, very interesting. The other 50 are not so interesting at this point.
Is that a function of when it's the 80 or the 30, is that about talking to people in the space and saying, hey, what products do you use?
No, I've been doing research on this for the last 2 years.
Yeah. So what does that look like?
It's a lot of work. It's a lot of reading. It's going to a lot of meetings. The area that I find is not interesting, for example, is residential solar. Resi solar, I think, is just an area that did very, very well during COVID, but was actually a major beneficiary of zero rates because people who put it costs about $30,000 to put a solar system on your roof, and 99% of people finance it. And when they were financing it during COVID, they were financing it at 3%. And today, if they need to finance it, they're going to need to finance it at around 9%. And one thing I learned in grade school is that 9 is a lot more than 3. And so sales are negative. Now, how long they'll stay negative, I don't know. But I'm not interested in speculating about it because the fundamentals right now are poor. On the other hand, just from a pure fundamental perspective, some of the solar panel companies that sell stuff to utilities are doing quite well.
So the other thing that's happened since we last spoke to you is that we are about 10 or 12 months closer to a presidential election in the U.S. Does the infrastructure thesis take a hit if we were to get Trump in office?
There's perception, there's reality. So the perception would be that a Republican administration would be less positive on greenification. And so maybe some of those stocks would take a hit because of rhetoric. I think the reality is, number one, the states that benefit from most of this stuff are actually red states, including on the solar side. And number two, one of the reasons why U.S. solar panel companies, like a company like First Solar, are doing so well is because there are major tariffs against Chinese solar producers. Those tariffs were created by President Trump, not by President Biden. President Biden just reaffirmed them. So at the end of the day, I don't think it's going to matter, although there'll be a lot of noise.
On the nearshoring, this is one of those things where it's always hard, at least from my perspective, to disentangle what's talk. You see a lot of there might be a McKinsey white paper about the benefits of nearshoring, and it's okay, but
I don't care about stuff.
Yeah,
like
no,
that.
no, I know. So I'm trying to understand what are they doing specifically? The companies, the industrial companies that you're talking to, what actually is being built either in the U.S. or Mexico
this is a long 2-hour conversation.
Yeah, okay.
But look, there's some factories that are being built here. There's some chip factories being built here. There's some other kinds of factories being built here. All you need to do is listen to, let's say, the Eaton conference call when they report to understand that they're doing very, very well, and they'll do very well for a long time because of those trends.
Eaton Corp.
Yes, ETN.
ETN.
I don't own it, but I've done a lot of research on it. You can't own everything, and that's a company. And they're saying what? That's a company that does electrification for factories.
Yeah, the stock's on what? And they're saying what specifically on their calls?
They got a lot of orders.
Okay,
that's what they're saying.
Wait, I'm looking at the share price now.
Eaton Corporation PLC manufactures engineered products for industrial vehicle construction, commercial, and aerospace markets.
Or take a company
hydraulic
like
products and fluid connect.
Take a company like a newer company. It's an older company, but it's a new company listed called CRH, which is a materials company. The headquarters is in Ireland, but 75% of the business is in the United States. They do roads, cement, all that stuff. And on the commercial side, things are picking up. And they're partially picking up because of the IRA and the IIJA money just starting to be spent. And one of the things that was said on the conference call by the CFO was that this is now a golden age for infrastructure. I never heard anybody say on a call this is a golden age for their industry, but he said it.
Yeah, some of these stocks, they look a little AI-ish when you look at the chart.
Just straight line up.
Yeah, straight line up.
So CRH is funny because, and this is a perfect example of why the thesis that markets are efficient is sometimes nonsense. So CRH was a Irish-listed, UK-listed company with 75% of its business is in the US. So materials companies in Europe sell at literally half the multiples of US companies for whatever reason. And of course, all the sell-side analysts who covered CRH were European analysts, and the people who cover Vulcan Materials, let's say, are US analysts. So CRH in September relisted in the US under thesis that, hey, we might get a better valuation because we're 75% US. And all of a sudden and that's when we started to buy it because we said to ourselves, this thing sells at less than half the multiple of its US comps because it has a different audience.
That's so fun. That's like sell-side analyst arbitrage.
That's
great.
exactly right. It was sell-side analyst arbitrage. And all of a sudden, you had US analysts pick it up and say, wait a second, this is 75% US. What am I missing?
So one thing that comes up in infrastructure conversations is this idea of crowding out. So the government is spending billions and billions of dollars through various programs on building out infrastructure, identifying new opportunities. And, we speak to people like Jigar Shah from the Department of Energy's Loan Office program about how he makes his investments. As a private investor, do you ever feel like you're competing with the government in this area in things like renewables or green energy or infrastructure?
No, not at all. I mean, I don't do private investing, so it's not my problem.
Oh.
I just do public equities.
Right. Okay. But as a non-government investor, do you feel like it's harder to identify opportunities because the government is in the mix now more than they used to be?
No, not at all. It's just another part of the story.
How do you take it into account?
They're spending money. I'm just trying to figure out who's benefiting.
Just follow the money.
I follow the money.
On electrification, you mentioned the grid, and there seems to be this incredibly wide consensus that the grid is not currently sufficient for
By the way, that
our
is
needs.
what in Silicon Valley, the tech world, that's what they're worried about.
They're all talking about
They're all
that.
petrified of it.
Who's going to pay for it? Because this was not something, the IRA spent a lot of money in a lot of areas, but it did not really do anything for the grid itself. And there was even a lot of acknowledgement at the time.
Let me rephrase.
Okay.
There's $500 billion in tax credits for green energy stuff.
Sure, absolutely.
And so, a company like Nextera, which will build, let's say, a solar field, gets a tax credit to do it.
Yes.
So that does help.
But then there's the lines and the wires. And so there's all these questions about regulations, and there's the question about money, et cetera. Who's paying for basically you mentioned generation on the solar field side. Who's paying for the lines that will connect all these solar fields?
Oh, the utilities are doing that.
Okay.
So if you look at the end of every year, when all the utilities report their fourth quarter, at least most of them, they put out their 3-year CapEx budget projections. So they only comes out once a year.
Okay.
So we just went through that period. So of the 20 companies that are very good Neuberger Berman utility analyst covers, the average increase in the 3-year CapEx budget is 20%.
Over the last year. Over the last year.
In other words, the 3-year combined forward is 20% higher than last year's 3-year budget.
That's
so basically 20% because you're adding one more year.
Yeah.
So, or something like that. That's a lot of money. And it's been going up and up and up and up and up every single year because utilities keep spending money to improve their grids.
What's the investment opportunity there, though? Do you buy the actual utilities, or do you buy the sort of like periphery?
I think you
things
can
that
buy some of
benefit
the
from it?
utilities. Unfortunately, utilities are very interest rate sensitive stocks. So, in a day like today, probably, I'm guessing, because rates are up, utilities will go down. But
The market opens in 2 minutes, so
I'm sure we'll know in a
Test the
second.
thesis.
We'll test the thesis.
But I think some of the utilities that are more on the greenish side are an interesting opportunity.
So you've been looking at the infrastructure space for 2 years now, as you mentioned. What was a surprising thing you learned, or how does this particular industry vary from other areas that you have looked at previously?
I think the big change is that if you take all the 80 companies, most of them are what would traditionally be considered very cyclical companies, very traditional cyclical companies with no good secular story other than how's the economy doing. And for the first time since I can remember, this whole group now has a real secular story. Not that they're not cyclical, they are cyclical, but they have secular tailwinds that they've never really had before. And those tailwinds are going to last quite a long time. That's the change.
The XLU ETF has opened. It's down a little bit. It's down about 0.1%. So
Okay.
there you go.
There you have
you
it.
can count that.
One for me.
Yeah, count that as a W. So sticking on this theme of the grid and electrification. Oh, actually, you mentioned. Now it's up. It's up. So I'm taking it
wrong.
away. Okay. Now it's flat. Now it's done.
Well,
Okay,
you
now-
know what they say about our business: peacock today, feather duster tomorrow.
That's a good one. No, this is the question I want to ask. Those 3-year projections that the utilities are coming up with, and you sort of talk about this shift from cyclical industries to secular, how do those 3-year projections compare to, say, 5 years ago when no one was talking about AI and no one was talking about the
Well, I wish I brought my chart.
Okay.
I don't have my chart. But my guess is that the 3-year CapEx budget today versus 5 years ago is probably 50% higher, at least.
Yeah, this is something that Jigar Shah, who Tracy mentioned, has talked about, which is that basically for the first time in forever, there's growth in end demand, which there basically wasn't before.
Correct.
Wait, can I ask something slightly off topic, but I think is of interest? So we recently had the sentencing of Sam Bankman-Fried.
Uh-huh.
And he was the subject of a Michael Lewis book, as were you, in a very different capacity. Have you heard from Michael Lewis at all? Do you keep in touch with him?
We haven't spoken in a couple of years now.
Did you follow the SPF trial?
Very marginally. I don't have really an opinion about it.
Did you read the book?
I did not read the book.
Oh, okay. This
I'm
isn't a very interesting
I'm
line of
embarrassed to
questioning.
say.
That was a good line of questioning, Tracy.
I tried.
It had the potential.
It had the potential to go somewhere.
to yield a lot of
Unfortunately,
fruit.
it's not going
Unfortunately,
anywhere.
the guest
shot it down.
Yeah. All right. So I hear all this stuff about excitement about data centers. And as far as I can tell, like part of the play is investing in, I guess, data center REITs, something like that.
Well, there are only two.
Yeah, right. Or you invest in like HVAC and the companies that do the
That would
cooling
be
around
Vertiv.
them. Yeah. So
Vertiv.
how do you actually play that thesis? That's what I don't get.
Well, I mean, like I said, you can't own everything. So, I mean, I'm not going to talk about whether I have a position in these. Vertiv is the sort of the pure play to sell cooling stuff into data centers. The stock has gone stratospheric. The multiple's really high. So you're playing, there's a lot of risk in that. Not that the fundamentals are bad. Equinix and Digital Realty are a more steady Eddie kind of play. What you're dealing with is that the whole AI story is coming. And so the demand is going to go up, but you're still dealing with CapEx budgets having come down in tech. So the growth is still not great or as good as people would hope, but it's coming. So that's the yin and yang on the data centers. And there are only two of them.
One of the things that we've seen with data centers, and I think it was a few weeks ago, there were some headlines about Microsoft wanting to have on-site nuclear power generation. And we've talked a little bit on this show about the hope, the promise of small modular reactors, which haven't really taken off, but maybe that could be a solution for some of these huge CapEx data. Have you looked at nuclear at all?
I haven't looked at nuclear. The regulatory situation there is just so complicated. The one, I think it was Constellation Energy is the utility that's done incredibly well because it has nuclear, but it's not creating, as far as I know, more nuclear plants. It's just that the value of its existing nuclear plants has gone up a lot.
That is a nice looking stock. On the other hand, NuScale, whose ticker is literally SMR, standing for small modular reactors, that stock has not done so well, though it did get a pop, I guess, on that Microsoft headline.
It is interesting. One of the things that's sort of emerging from this conversation is, even though we're talking about new technologies and things like that, a lot of the benefits seem to be accruing to the biggest players in the market. So like the big companies. I don't think this time last year anyone would have expected Microsoft to like emerge as a leader in AI. And yet that's exactly what's happened. Is that what people should be focused on? Like who's going to dominate these CapEx heavy tech plays? It's going to be the guys with the money and the like existing connections.
I mean, there are two parts to this. There's no question that at this point, the dominant players are the big boys. And they're going to be spending the money. And then, there'll be interesting smaller companies that create apps. And we have no idea who those are at this point. None. One day they'll show up on your phone.
Something I'm curious about with the data center REITs is that they're REITs. I mean, I know they talk about the AI opportunity and the demand for compute that's going to, theoretically, keep exploding for years. But on the other hand, like, they're not Google. They're not Amazon with AWS. They're not NVIDIA. Is there a risk that like they just can't compete with the sort of like specialized, more tech-forward companies that are at the very cutting edge of this?
I mean, the hyperscalers want to build their own data centers. But, an Equinix, for example, services everybody who's not a hyperscaler. So they will do really well when all the apps that are going to be created get created and people need to put their stuff in the cloud, and they'll do it through Equinix. So it really depends. Digital Realty is more of a hyperscaler.
Can you say more about Oracle? For a long time, I sort of thought of they always seem to be straddling in my mind where it's like, and I don't know that much about the company, but they always seem to be sort of on the cusp of like, are they in the category of the hyperscalers? Are they sort of a legacy software database business that,
Well, they're a legacy software database business that's moving to the cloud.
Yes.
They're an AI play. The problem with the stock has been that every couple of quarters they have a really bad quarter and they say sorry.
As long as they apologize.
But in this most recent quarter, they seem to have, at least for now, gotten their act together.
And what's working for them?
The demand because of AI or moving stuff into the cloud, to move their database into the cloud, seems to be increasing. Their problem, they say, is they haven't been able to buy enough chips to satisfy the demand. When you think about that, that's probably it's a better problem to have than the alternative. And they seem to be getting their act together. So, they finally announced a good quarter and people got excited about it, which is why the stock finally did well. That's a more recent purchase of ours.
Have you tried any of the AI chatbots yet?
Not yet.
ChatGPT.
I'm too old.
You're too old. you can make comic books on some of them.
Yes, I knew that. Imagery. You can make a comic book on a chat.
So, Joe, I didn't realize Steve's a big comic book fan.
Yeah. So, what's the comic book play?
There's no comic book investing plan that I know of. The comic business is a small business.
But you're really into comic books.
Totally. I own one of the largest digital comic book collections in the world.
What does that mean to own
is that like
digital...
NFTs? What is that?
Yeah,
no, it's not an NFT.
What is
so think of it this way.
What is
instead of buying a physical book, you now read your book on your Kindle. So comic books became the same thing. There was an app called Comixology where you would buy your comic on Comixology and you'd read it on your iPad. And Amazon bought it. And so my comic book collection is now in my Kindle. So the size of my comic book collection, I'm very proud to say, as of this morning, was 10,863 comics, of which I have read every single one.
For real?
For real.
Why?
I'm doing this since 2012.
Well, I imagine, I don't know. I mean,
what's the attraction?
What's the attraction of spending so much of your time here in life?
I like to read.
Okay.
I read a lot of books.
Do you
I
read
read-
non-comic books?
I read a tremendous number of books.
Okay.
Nonfiction and fiction.
Okay.
And I have always enjoyed reading comics. And the comics have actually gotten very, very sophisticated in terms of literature. And I enjoy reading them.
What's your favorite?
Oh, that's easy. The greatest comic book ever written is Sandman
Oh,
by Neil Gaiman.
yeah. I used to have a Sandman-themed tarot card deck for some reason, even though I never read the comics.
The first season on Netflix was actually quite good.
What's it about? I don't know anything about comics.
Sandman is the god of dreams.
My son is into Spider-Man, so I'm trying to like bond with him by like getting him.
I could write a dissertation on Spider-Man.
Oh, really?
Literally.
What would you say?
I actually have a
What would you say in it? This might.
I have a
help me.
literary theory of Spider-Man.
Good. Tell me this. I need some stuff to like bond with my son over this.
Well, you should get your son to read the newer Spider-Man, who's called Miles Morales.
Oh yeah, he loves Miles.
He loves Miles. So my literary theory on Spider-Man is that Peter Parker is actually Jewish.
Oh, I like this. I like this.
Metaphorically.
This is good. This is
metaphorically.
Keep going.
So here's why. So first of all, the guy who created him, Stan Lee, is Jewish, or was Jewish. Now, who is Peter Parker? So Peter Parker is raised by his elderly, kindly aunt, who looks like your Jewish grandmother.
Mm-hmm.
He marries the girl next door, who's the gorgeous non-Jewish girl, so every like Jewish boy's fantasy, and he's consumed by, he's a science geek nerd, and he's consumed by a sense of guilt and social responsibility. So who is that? That's that Jewish kid.
Okay,
That's my literary theory. I've had it for a very long time.
Do you think Superman is Jewish?
Definitely not.
Oh, really?
Absolutely not. Although he was created by Jewish guys.
Yeah, because I thought he was Jewish because some of the other names of his like relatives, and I'm not a big comic person, but like they have sort of, I thought they sounded sort of Jewish.
Not at all. You're way off.
Okay.
I'm desperately trying to think of some sort of finance or markets related comic book
Some way to
question.
bring this into the
and
actual
I'm totally
nature of the
failing.
conversation.
We could just talk about comic books.
Well, the only thing you could bring it up to is I have no opinion on Disney. None.
Okay.
But I could tell you what I think is wrong with the Marvel comic book movies.
Tell us. Oh, yeah.
Because Disney owns Marvel now,
Disney
right?
owns Marvel, and that's been a big source of their profitability. So I think the problem with Marvel is that they've lost their story. And there are two parts to this. So part one was they had a great story. It was a very complicated story where the villain only got revealed years after they started the whole process. You know, it was multiple stories with tangents, but in the end, it all wove its way back into the last two movies, and then it was over. And they have not been able to find a new story, and they've been basically floundering because they don't have one. And the other major problem, which is even more serious than the first, is that there's a concept in comics called the Trinity. So in DC, it's Superman, Batman, and Wonder Woman. That's the core. And in Marvel, it's Captain America, Thor, and Iron Man. And at the end of the last Marvel comic, Iron Man's dead. Captain America is over 90 years old. And unfortunately, since then, Thor's been made into a comedic joke. So you've lost your Trinity. So even if you had a story, who's going to care? Because people care about those three characters more than anything else, and they're gone. That's my thesis.
They could just start the whole thing over,
well, you
like
could
they
reboot,
did with Spider-Man,
but
right?
then you have to get new. You have to start fresh. I don't know if they're willing to do that yet.
This is such a refreshing, interesting take. We could just talk about this because I do know, like, as someone who I kind of like going to the movies, but unlike you, I was never a big comic book reader. During that sort of Marvel era of movies, when it just seemed like the only movies that were in the theaters were just these endless superhero movies, I just like totally tuned out. And so I was
there religiously.
Yeah. But I, for one, was like I am relieved and sort of excited at the idea of Hollywood going post-superhero and maybe making movies again, like Oppenheimer with normal people.
By the way, Dune Part 2 was very good.
I've been meaning to.
I haven't seen it yet. No spoilers, please.
I haven't seen it yet either. But I don't know. I, for one, am excited about a sort of post-superhero era
That's
for Hollywood.
fine. I'm just talking about the problem with Marvel is.
Yeah. But it's
that's
connected,
a big
right?
issue. But that's a big issue with respect to Disney.
But it's connected, right? So it's like these stories have just gotten tired for people because there's nowhere to go for them.
Well, you need a new story. And they haven't found one. So if I go back, now I'll show you how into this I am. Loki season 3 was terrible. The Marvels movie, which is recently, was awful. Guardians of the Galaxy.
Why? Like, what made it awful? Because they all look awful to
me. It was just stupid. The story was dumb. It wasn't interesting. And they tried to make it too much of a... They have a tendency to try and make their movies too funny. And it doesn't translate very well anymore. And then the Guardians of the Galaxy Part 3 was so boring, I almost walked out 3 times.
That one disturbed me because there's a lot of animal cruelty in that one. And it was just kind of sad to watch.
There was a lot of animal cruelty to it. They tried to make it relevant.
Yeah.
But it was just a bad story.
Yeah. Has the market for comic books changed in the sense that, so everyone knows if you have a really successful comic book nowadays, you can get a franchise attached to it, a film franchise. Does anyone come up with characters based on the idea of like what will play well on screen? Overall, it feels like you don't actually get that many new characters and new comic books.
There aren't that many new comics. There really aren't.
Yeah. Seems a shame. It seems like it would solve the story problem if we were actually coming up with new stories.
Well, there's new stories and then there's new characters. There's always new stories. But, the problem with Marvel is they don't have a story.
Yeah.
They just don't have a story.
I didn't realize that. I didn't know anything about this. I just sort of assumed that every superhero thing was just sort of this endless story that could go on forever.
Well,
with endless
it does. But when you're making movies,
yeah,
what they had was this. They had all these different origin stories, but then at the end of the day, all the movies were going towards this one central story, which was the last 2 movies, and then it was over. And so now you got to start again, and they haven't been able to find how to start again.
Here's my desperate attempt to bring us back to our core content.
Uh-huh.
If you could come up with a comic finance, investing, markets, economics crossover, what would it be?
Oh boy!
I don't know.
I don't know. That's
super portfolio manager.
No. I used to joke when I was a hedge fund manager
Superman.
on Halloween. I'd take my kids around just as me, and they'd say, "Who are you?" I'd say, "I'm a hedge fund manager. I'm the scariest person on planet Earth."
That's low effort.
Should we go back to some of your big themes?
Sure, why not?
Okay.
Well, this was more fun, though.
I mean, this has been a true light bulb moment because all I knew is that, people weren't really watching the Marvel movies the way they were 3 or 4 years ago.
No, there's a reason.
And now, for the first time, it took...
I just want you to know that one of my favorite characters has always been Thor.
Uh-huh.
And the last movie was so bad, I was offended.
Really?
Yes. It's like, how dare you do that to my character?
Interesting. God, I really don't know exactly where to take this, but let's just maybe go back to some of the infrastructure questions. It sounds to me like, and maybe this is a sort of investing philosophy question, and you mentioned the sort of the sell side analyst arbitrage with that one company that got listed here. You mentioned the fact that even if there's a change in administration, that doesn't necessarily change the underlying stories. It sounds to me like from a philosophical perspective, your view is there are big long-term trends. And don't presume they're all priced in immediately. Even if we can all agree that there's 10 years of growing electricity demand, there's 10 years of demand for greater cooling solutions or whatever it is, or more cement or more copper or whatever.
I'm not a great believer in it's all priced in.
Yeah, that's sort of what
I don't subscribe to that.
Yeah, that's sort of what I wanted to get you on. Like, how do you think about that question? Because I have
the way I think about it,
I have journalist brains, so I assumed if I know about it, it's already priced in.
I mean, when people say it's all priced in, my question to them is always, how do you know? Did you get all of planet Earth into group therapy and ask everybody, is it priced in? How would you know that? Look, this is a story. It's a story that's going to last a long time. And as long as it keeps going, people are going to want to own it. I mean, it gets back to what I said before. In good times, people traffic in stories. And as long as the story is there, they'll buy the stock. I mean, if you go back to, the internet bubble, what killed the internet bubble? It wasn't valuation. It wasn't that it was all priced in. What killed it was that the U.S. entered into a recession and these companies' fundamentals fell apart. That's what killed it. It wasn't that they were very expensive, although obviously they were in retrospect. So this infrastructure story, I think, is just going to go on for a very, very long time. And as long as that's the case, people want to own some of these stocks.
All right, Steve, it was so good talking to you again. We talked about infrastructure, AI, crypto, and of course, comic books. Slightly unexpected, but a lot of fun. Thank you so much for coming back on All Pods.
Thank you.
Joe, that was really fun. I did not expect us to spend 20 minutes talking about comic books, but I enjoyed it.
No, I'm really excited. Tonight, like I said, I'm going to go home and tell my son that, like him, Peter Parker is Jewish and see if that... I mean, like I said, I got to bond with my son over his Spider-Man affinity, so that'll be a line.
You got to develop a literary theory of Spider-Man, just like Steve. That's what you need to do. No, there was a lot of interesting stuff in there. I thought the point about stories, so, in good times, people are into stories, and then what really tends to knock those theses are when the bad times start, and that's when things start crumbling. So far, again, it is now April of 2024. We do not seem to be on the immediate cusp of a recession, so you can see why people continue to get excited about these stories. The other thing I thought was interesting was the idea that, okay, well, a lot of the infrastructure programs have been started under the Biden administration, but there are aspects and themes that emanated from the Trump administration. So things like the subsidies for solar panels and the fact that we're not importing as many Chinese solar power panels as we used to. And that would be expected to continue. So, yeah, that was interesting.
Totally. In general, I liked his point at the very end about his belief that things aren't just priced in immediately. And as long as things are good, people will ride the story. Yeah. I mean, look, so a year ago, by a year ago, so April 2023, it was unambiguously understood that NVIDIA was a key player in AI, right? It was everyone had used ChatGPT by that point. Everyone knew it was trained on NVIDIA chips. Everyone was like, oh, this is crazy. And in that time, NVIDIA is up over fourfold. And I don't think there's some new information that about NVIDIA or AI that's come out. It's basically just this story is very good. And maybe some of the numbers and the degree to which other companies have piled in or wanted to buy chips is true. But to his point, this idea that it's all priced in the moment we're aware of the situation is probably a good thing to internalize.
Yes. And I always think life would be so boring if you went around just assuming that everything was priced in immediately, right? What are we even doing here if we really believe that?
Yeah. Why do we have a investment industry at all if everything... I kind of still believe that, but I don't.
I refuse to believe it.
Well, you would be a better investor than I would.
No, I wouldn't. Okay. Shall we leave it there?
Let's leave it there.
This has been another episode of the Odd Lots podcast. I'm Tracy Alloway. You can follow me at Tracy Alloway.
And I'm Joe Weisenthal. You can follow me at The Stalwart. Follow our producers, Carmen Rodriguez at Carmen Arman, Dashiell Bennett at Dashbot, and Kel Brooks at Kel Brooks. Thank you to our producer, Moses Ondam. For more Odd Lots content, go to Bloomberg.com/oddlots, where we have transcripts, blog, and a newsletter. And you can chat about all of these topics in the Discord 24/7 with fellow listeners, discord.gg/oddlots.
And if you enjoy Odd Lots, if you like it when we talk to Steve Eisman about comic books, then please leave us a positive review on your favorite podcast platform. And remember, if you are a Bloomberg subscriber, you can listen to all of our episodes absolutely ad-free. All you need to do is connect your Bloomberg account with Apple Podcasts. Thanks for listening.